Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Thursday, the 8th of September. Starting off with the Ftse 100, and it's sandwiched between the two-year uptrend line there around 71.90 and the 50-day moving average. Slightly falling there around the 73.30 level. End of day close outside those parameters decides the next move. At the moment, with the RSI below 50, I suppose we are slightly biased towards the downside, but then again, we have bounced off the two-year uptrend line on many occasions, especially since the middle of June. So it depends whether you feel that the uptrend line is more powerful than the RSI, and probably in this case one would have to give the market the benefit of the doubt. Moving on to Bitcoin, where I think to start the week we were looking rather grim in terms of a potential new leg to the downside. Here you can see that the market sort of fudged that now, so we were looking as though we might break below 19,000, but so far just hanging around either side of that, which is typical. But at the same time, the setup here still does look ominously like what we saw in April, May, with the rally above the 50-day moving average and then a break back below it. Break of 19,000 probably gets us into the mid-teens, so maybe 15,000, something like that, if the big breakdown happens. On the positive side, we've got bounce of RSI 30 again, so that may delay the situation. But as I said, you've got a parallel 50 and 200-day moving averages falling. Really does look like April and May all over again. Only back above the 50-day line now, around 22,100, really snapping the idea of a fresh leg to the upside. On to the stocks, and a lot of the favourites of the recent past are in here, just a sort of celebratory mode. The first one, which is a bit surprising in terms of the downside, is Angus. Here we had previous target around 2 pence, and we hope that 2 pence will now come in as support. You can see the last low there just before the rally towards 3 pence was almost exactly at 2 pence. So 2 pence, 190, something like that. Hopefully the limit of the retracement, which already seems rather unfair in terms of the prospects for the company. But this is obviously a technical look at the market, or stocks rather. So let's just go for 1.9 to 2 pence as the limit of the latest pullback. Overall, though, above 2.8, and that resistance line there from November, we're looking for maybe 1 to 2 month target as high as 4.5 as a best case scenario. On to Egdon, which has been going great guns of late and hasn't really had too much of a retracement. Here we were looking for 8 previously, after looking for 6.5, and now we're looking for as high as 11 pence by the end of next month, which would be very pleasant indeed. So Egdon doing rather better, just in terms of the comparison with Angus at the moment. Ideally, we get decent end-of-day closes above the August peak, around 8.45 for the start of September, and so it looks as though we're in that kind of mode at the moment. On to a stock which one would have thought in the energy crisis would do rather well, Geiger counter, and it is doing well, above the 200-day moving average at 50 pence. We're looking for the top of that rising trend channel from March as high as 62 pence. And the whole rally here started off by bullish divergence, that final July bear trap, quite a sort of highlight in terms of the recent price action. On to one of the more obscure stocks at the moment, and here I did pick up on this with the bullish divergence, and we've already really hit one of the targets there, so 35, a retest of August resistance. If we're really lucky now, we could get up to the next level here, which was or would be up to 42 in April. Resistance there, upside valid while we hold above the bottom of the gap there at 25 pence. But let's see how far that bullish divergence and the bear trap that we had off the back of that is actually going to get GYG higher. I don't suppose many people trading it, but at least it's an interesting charting situation. Here we've got iGas making more progress now. We've had it the upper line there, hitting the top of that rising trend channel from January. Still looking for £1.20, maybe as soon as the end of this month. And that's valid really currently while we hold above the low 90s, the old August peak there at 89. So one would have thought the 90 pence area would cover any retracements, any Angus type retracements that we might get. Another dark horse, which has done rather well, is MC Mining, going up sort of 20% a day, I think, at the moment. Here we were looking for 35 pence, while we were above around the 25 pence level. That's still the case. Bottom of the gap there at 24 pence, and above that looking for 35, hopefully sometime this month, even if it's only for a blink and you missed it type of event. On to Orcadian, which one would have thought with the energy crisis again and North Sea exposure, this should be going great guns, and possibly it will. We already had an unfilled gap to the upside after a bear trap at the beginning of last month, so that does actually show this is in very strong technical territory. We're now back above old December support there at 35, so basically an end of day close above 35 should take us up to 50 at the top of that broadening triangle, and that could be seen as soon as the end of this month. Only back well below the gap there at 31 or so, really delaying the upside scenario for Orcadian. Moving along to Orphan, which is going to change its name to HVivo, I think next month. Here, unbelievable, with all the fundamentals going great guns, that we're still near the lows, but shares making a good attempt to try and break the resistance line, or at least the downtrend there. One could draw that maybe more accurately. So we're really looking for 11.5 pence plus on an end of day close or a weekly close basis to take the shares back up to 15 or 16 pence, which is post-June resistance. Not expecting any fresh lows now with the update that the company came up with today. On to Tintra, which is looking quite steady at the high levels. Here we had a mid-August resistance around 183. Above that, we're looking for the top of that broadening triangle from the beginning of the year back in January, as high as £2.80. Maybe by the end of next month. We're going into a golden cross there, so the 50 and 200-day moving averages both rising. It means we're probably a week or two away from a golden cross. That's normally the strongest part in the cycle. Didn't work that well with the Ftse recently, but not over yet on the UK index either, I suppose. On to UK oil and gas, which has been an improving market over the recent past, not surprisingly, given the macro environment. We're back above the old February support there at 0.09 pence, above the 200-day moving average as well at 0.11, and above that on an end-of-day close basis looking for 0.18. I suppose the interesting part here is that we've had 3 or 4 days now of a rally in the stock, and hasn't been sold off. Normally tend to get 3 fine days and a sell-off with this stock, so doing well today on that basis at above 0.11, looking for 0.18 there. On to Union Jack, which is also fulfilling the best hopes of the bulls at the moment. I was looking for 47 pence, I think just a couple of days ago. We seem to have exceeded that after the 40 pence target previously. Means we can upgrade the upside if I can get this line drawn properly. And that would mean that we're actually going for at least a target towards the 65 to 70 pence level, which seems quite unbelievable, but maybe as an end of October target, that could be on the cards the longer we stay above the 40 pence zone. So above 40, looking for up to 70 on Union Jack, which would be one hell of a result, one could say. Finishing off with ValiRx, where there's been a new appointment at the company. We've got the shares breaking that downtrend line from October last year around the 12.5 pence level, and above that we're hoping for at least the old March support at 19 or 20 pence to be delivered over the next 4 to 6 weeks, but we'd like to stay above 12.5 pence area and the 50-day moving average after that trend change. That's it from me today. More updates tomorrow.